Hello to all you amazing traders. Welcome to Prime Risk. Today, we're going to explore one of the most exciting and effective trading strategies, a strategy that can multiply your analytical power. If you've been using Fibonacci as just a simple tool or feel like you're not getting the best out of it, this video is exactly what you need because today, you'll learn a strategy that can turn you into a profitable trader. So, if you're ready to take your trading to the next level, stay with me until the end of this video. I promise you'll learn tips that are rarely shared anywhere else. And as always, your support is our motivation. Here's what you'll learn in this video. Golden zones of Fibonacci, precise divergence identification, advanced strategy FD1 tutorial, and final filters for the strategy. Fibonacci is recognized as one of the golden tools in the trading world, yet many traders lack the knowledge to use it professionally. Most traders rely on various Fibonacci levels, but professionals focus solely on the golden zone. The area between 0.5 and 0.618 on the Fibonacci scale is referred to as the golden zone because it represents one of the most significant support and resistance levels. It frequently leads to strong price reversals. While other Fibonacci levels are also important, none are as critical as the golden zone. Precise divergence identification. There are various indicators available for identifying divergence in the market, but one of the best tools is the RSI indicator. Simply add the RSI indicator to your chart with its default settings. When the price forms higher highs but the RSI shows lower highs compared to the previous peak, bearish divergence occurs. Conversely, in bullish divergence, the price forms lower lows while the RSI shows higher lows compared to the previous trough. These divergences provide valuable insights into potential market reversals. FD1 strategy tutorial, Fibonacci plus divergence. Combined strategy and uses two powerful tools, it gives us reliable signals. However, always remember that no strategy has a 100% win rate, which is why we always use a stop loss. In the first step of the strategy, we go to the 1-hour time frame and look for a price trend so we can measure the size of this trend using Fibonacci. For example, in GBP USD, we see that the price is making lower highs and lower lows compared to its previous highs and lows. We identify the last price movement and apply Fibonacci from the start to the end of the movement. Then we mark the golden zone, which is between the 0.5 and 0.618 Fibonacci levels. The next step, we go to the 5-minute time frame. When the price reaches the level we've identified, we check the RSI to see if a divergence has formed when the price reaches the golden zone. As you can see, the price forms a 3-push pattern and reaches our level, and in RSI we can observe that lower highs have formed compared to the previous high. This confirms that we are ready to enter a sell position. Final entry confirmation. Once we are sure about the divergence, we draw the trend line of the most recent lows. As you can see, drawing this trend line is very important, so make sure we draw the last trend line at this level, not the previous ones. After the trend line breaks, we can either enter the position with the breakout candle or wait for the price to pull back to the broken trend line and then enter. Personally, I wait for the pullback so I can find a better entry point and a better risk-to-reward ratio, but you can enter after the trend line breaks if you prefer, but you should backtest beforehand to determine which option works best for you. After the pullback, we enter the position with the first full body candle and place our stop loss just behind the golden zone. For the target, we can set a take profit of 1.5 to 2 times the stop loss. As you can see, the target is beautifully touched. Let's look at another example together. In the 1-hour time frame, as we can see, the price is in an uptrend, making higher lows and higher highs. We select the last wave and draw Fibonacci from the start to the end of it. We mark the golden zone. Next, we go to the 5-minute time frame. When the price reaches the golden zone, it is forming lower lows, but in the RSI, we observe higher lows. This indicates that we are ready to enter the position. We then draw the trend line of the most recent lows, and after the breakout and pullback, we enter the buy position with a strong bullish candle. We set the stop loss just behind the golden zone and the take profit at a 2x risk-to-reward ratio. Initially, the price moves toward the stop loss, but since the stop loss is in a safe zone, the price reverses and beautifully touches our target. Remember, when entering a position, you need to check all the conditions. Let's look at this interesting example together. In the 1-hour time frame, we draw the golden zone and then move to the 5-minute time frame. The price once again reaches the golden zone with a triple touch. As you can see, the divergence is clearly visible, so everything is ready for entry. We draw the trend line, and yes, the price breaks the trend line with a very strong candle. But the entry is not triggered anymore. Everything was right, but the price didn't allow entry. You need to learn that sometimes it's not possible to enter, and we simply move on and look for the next opportunities. Strategy final notes. In this strategy, at the first price interaction with the golden zone, we look for divergence and trendline formation. If the price reaches the golden Fibonacci zone for the second time, even if divergence occurs, we do not enter the position. Only the first interaction is important to us. If you've enjoyed the video so far, give us a small like, it really energizes us.